Bear rule number 2. You can't fight a bear with bull tactics. Nothing will be safe, although some stocks might be safer than others. So we always say don't fool yourself in a bear market. You think you might be able to hide out in utility stocks or energy because energy happens to be working well this year, even though other things are getting beat up. Eventually the bear finds its way into most sectors. You might get lucky, but you shouldn't really bank on that. I've seen it so many times where, let's say, some of the blue chip stocks are holding up better, and let's say some of the high price stocks are getting hit, or some of the cyclicals. People flock to the blue chips because they're safer, and then they eventually get hit too. In a bad bear market, pretty much there's no good place to hide. Fear starts to be contagious. A bunch of people will sell, investors will sell, push the market down. That sparks more fear, more selling, and it's a vicious circle. And eventually there can be forced selling. Those investors that have bought on margin by borrowing money to buy, and their collateral drops because the market's dropping, they can get a margin call, which just means they get a call that says you need to sell. So they don't even want to, but down it goes. So that domino effect kind of spirals around, and it can suck everything into it. Eventually there'll be some great bargains, but not yet. You know, we have to be, this is a bear market, so we have to be cautious. And we can look for bargains later, and we'll talk about that in rule number 3.